making it exciting? Because it is exciting. You're dealing with some very international issues, very relevant issues, and things that really matter for the world economy and world peace. I mean, it sounds dramatic, but it does matter because when countries don't trade with each other, they have no real connection, which leaves animosity and things to derive out of that.
Yeah, look
trade together, stay together.
Absolutely, and look at what's happening now on the back of protectionism and so on.
We're going to get into the protectionism. It's going to be a big
people are just talking tough now. And if you don't get trade to lower these barriers, then it becomes very, very difficult.
So then what happens, for example, because you mentioned you wanted to talk about the trade finance gap.
Yes.
It's $1.5 trillion gap in what needs to be financed and what is financed. And typically from what I know about it, and I'm sure you're going to educate us about it as well, one of the main reasons as to why that is because there's a lack of AML and KYC regulations for banks to be confident that they won't get fined or they have all the paperwork in place. Typically, this happens in countries or in continents like Africa, where their AML KYC capability and their standards aren't as succinct or aren't as synced to Western markets. How does that play out in reality? So if I can't finance an SME, and SMEs are the biggest groups of kinds of companies that don't get financing, what happens as a result of that? Can you go through the process of what that means?
Absolutely. So,
and give us some examples, perhaps, of projects that you could have worked on, but because of certain reasons you couldn't.
Look, for me, the examples are less so, and you'll understand from my answer, because I look, what you said is the script in terms of what, for example, is in the Asian Development Bank, they do a tremendous survey every year.
I have it here.
And they say, if you ask the bankers, what do they say the main obstacles are? And I know those figures because I've included them in my lectures as well. So number one is undoubtedly compliance. But listen, I mean, when you work for a bank, and this is very controversial, some people don't like me saying this, but when you work for a bank, compliance becomes a bit of an excuse. So, for example, Crown Agents Bank, I mean, we don't shy away from compliance. We take compliance to it's our raison d'être, our reason for living. But we make it a competitive advantage for us because we're so good at compliance that we're actually setting the trend. And educating is probably a bit of a strong word, but enabling banks and, mostly banks in places like Africa and Asia and the Caribbean and so on and so forth, and parts of Latin America, to become good at this compliance thing. So we're often engaged by supranationals like the IMF and the World Bank, and then cascading down to central banks and so on, to work with the commercial banks in these places to make them good in terms of compliance and raising the standards. I mean, I'll never forget when people tell me that compliance is an issue. Okay, compliance may be an issue, but it's more of a cost issue if we're truly honest. I mean, it is how much you're going to invest as an institution in onboarding another institution in a small country that is not going to yield enough for you to cover your human costs and your infrastructure costs and so on and so forth. So that becomes a massive issue. But it's a cost issue. It's not really a matter of how dangerous these places are. Of course, there is an element of that because then you allocate resources in accordance with your perceived risk. But answer me this: if it was a matter of engagement from the local counterparties, because as everybody says, they're all so bad and so risky, how do you explain that a bank in Sierra Leone, for example, when we went in and did our due diligence and we told them what they needed to do in order to become kind of world-class from a compliance AML AFC point of view, they go out and they hire 100 temporary staff to make good their account opening forms with their clients in a space of 3 months.
Do you want to answer that? I think part of it is the fact that you guys as Crown agents have an experience in working in emerging markets, so you know their sense of their tempo and how they respond to your requests. banks who typically work in more established markets may not even want to get involved because they think it's too sticky, it's too messy. We're not even going to make a lot of money since it's an SME.
It's the money issue. It's the money issue.
It's an SME, so how much can we really flip it for? Not too much. Let's stick to what we know, and that gap will grow. But if it doesn't affect us, then it's not our responsibility to go everywhere. No. It's to go to where we feel comfortable. If we don't feel comfortable, that's where you guys pick up the slack, and that's where you guys can become real leaders in this and helping those institutions.
And if you think about it, it's a matter of scaling as well. So if you're financing an SME for, I don't know, $500,000, I would dare saying that the effort invested and the manpower invested would be as large as a $10 million facility for a trader somewhere. And of course, the legal costs and so on make it somewhat ineffective. So that is also one of the origins of the trade finance gap. But the interesting part, if you look at the assessment by the Asian Development Bank, is that the biggest slices are around creditworthiness of the borrowers and also structuring ability. And I normally tend to collapse both of them because you can look at or you can mitigate the credit worthiness or lack of it through structuring. So why did those, your first question about my career and my path and so on, and trade finance gap, how do they fit so well together? And that's kind of the cherry on top of the cake here is because it's all education driven, right? If you don't understand what you're doing, if you don't understand how to take security, for example, in a trade finance transaction in an emerging market, and eventually how you can create economies of scale around taking security for different borrowers, SME borrowers, for example, you'll never be able to cover the trade finance gap. If it was just a matter of compliance, then we all shy away and the gap will only tend to increase. If we're serious about, I normally say something that, again, is very controversial, and I apologize. I don't want to offend anyone, but as many people, bankers tend to be somewhat reluctant to go the extra mile. Yeah. Right.
They're conservative as a profession. They want to mitigate risk as much as possible. So why go into an area where we don't know?
You don't go the extra mile. You're afraid of the unknown. You're anxious. You're this and you're that, and you're fearful.
Also, compliance costs are a lot, and being fined by some the FCA or the SEC is
it's not pleasant. It's not pleasant. But the thing is, if you do it properly, you don't get fined. If you do it properly, you don't get fined. If you do your security as well properly, you mitigate the credit worthiness and you mitigate your structures and collateral and this and that. But the most important thing is to go from A to Z in the value chain, right? Understand your cash flow gaps, understand how to extract security from the client's operational cycle, and eventually what security really works. So have a good lawyer at all times.